Talk to HPCL. Lots to talk about. It's the best performing OMC stock since the excise duty hike. It's gained a good 61% from the October lows. So let's welcome on board Mr. MK Surana, the CMD at HPCL, joining in the show right now. Mr. Surana, morning. What the market wants to clearly know is that have OMCs, including you, started to retain part of the benefits of the sharp crack in crude oil prices? And if yes, by how much are you retaining right now?
Yeah, good morning. There had been a downfall in the crude prices in the recent weeks, and but sharp than anybody had expected, and that definitely gives more comfort to oil refining and marketing companies in terms of refinery margins, in terms of capacity to have reduced pressure on the marketing margins. Now exactly that how much it reflects or how much it increases the capacity, that we need to see as we go along and some more days, because there has been sharp swings upward and downward in recent times. So it will be incorrect to predict immediately whether that has really been reflecting in the marketing margin. And as I had showed earlier also, that it is not day-to-day basis, because the timing of purchasing the crude, payment and the conversion and selling in the market has got different time frames, and that is the overall life cycle from crude to product which will decide the margins.
So my limited point here is that what is stopping you from getting that 1 rupee back?
No, as I told you that there was a reason why that 1 rupee cut or absorption by the OMC was brought in. Now this downward trend in the crude oil prices is a recent phenomena. In fact, it has been a sharp one than anybody would have expected earlier, and it increases definitely the possibilities of regaining some of the lost margins which has been done earlier.
I appreciate that, but I hope really from an investor standpoint, and this is not about what is right or what is wrong, but if I look at the market caps of oil marketing companies when crude was at $65 versus where it is right now, when crude has come back to $65, there is definitely an erosion in market cap, because markets believe that oil marketing companies are losing that independence. So the sooner you move on getting that 1 rupee back and sending a strong message across that oil marketing companies are independently governed, and there is no pricing pressure or there is no intervention per se, it will only help your minority shareholders.
Anuj, earlier also I said that as far as the daily changes in the oil pricing and the deregulated scenario continues, even on the day when this 1 rupee absorption was brought in, that day also I said, and that continues to be so, which you might have seen that even the next day of that 1 rupee cut, the prices did get increased based on the daily international product prices. And subsequently, I think 18th October or so, when the crude started falling, the prices are being brought down on day-to-day basis. So as far as the daily pricing scenario, and to that extent deregulation continues. It was a specific intervention which the government has brought in at that point of time, and I would probably agree to you that when the crude prices come down, then we will have the more leeway and the flexibility to recover the margins which we would have lost because of that 1 rupee. Now the specific dates or reasons or details as of this time I would not like to comment, but only thing I can say is yes, there is a good possibility of recovering the lost margin if the crude prices continues to be on the lower side the way it is. But the downward trend is just a recent phenomena, and we need to watch it for some time, but I reconfirm that yes, there is a good possibility to recover these margins.
Surana, even the spike in crude was recent enough. So between June and now, you've seen the kind of volatility and the kind of speculation that's driven prices up, and then as fast as they've driven them actually down. So if you're saying that the downward trend is a near-term trend, so to speak, are you hinting at the fact that with the whole Iran sanction issue getting diluted for the near term, that once that supply actually comes out of the market, which is right now, world output is standing at about $100 million, 100 million barrels per day, that you would see an adjustment in prices, that you believe prices could trend higher again?
No, the current thinking in the oil market is not like that, because as far as the production is concerned, US, Russia, Saudi Arab, all the three countries and some of the other countries have as well has increased the production. In fact, US production has surprised everybody, and which is almost replaced the Iran barrels or Venezuela barrels which could have gone out of the market. Now the Iran barrels not going out of the market, that brings an additional cushion in the market. Added to that, a little bit of warnings on the demand, because the high prices do have sensitivity to the demand as well. And there is an appreciation of the fact that a higher crude oil prices is not good for both the producers as well as the consumers, because it may have an impact or maybe a permanent loss of demand. And therefore, as of today, the market seemed to be oversupplied, which is also reflected in the inventory buildup. In fact, the crude production from US is a bit of surprise, because lot many people expected the problems and constraints in the pipeline capacities. But there is a substantial, I think it is almost reached 11.4 or 12, almost 12. And therefore, there is a supply and there is a demand warnings. The Iran barrels are not fully out of the market, so in the near future the market seemed to be oversupplied, which is also being seen in the trends, where the future prices are more than the current price, what we call a contango. So I don't expect that in the near term the prices are again start climbing up, and we expect the prices to be on the lower side in the near future, at least in the Q3 or the first quarter of next year.
What is the demand?
And even otherwise, the $100 per barrel, $100 per barrel pricing, I don't see the scenario in near future, because when it touched 86 itself, there were concerns in the demand, and on both the sides, the consuming country as well as producing country, and especially for the countries like India, where it also has got an impact on the current account deficit, in the balance of payment, and it incentivizes the other forms of energy getting accelerated further. So I think that we should not be looking at $100 scenario now. It is definitely more downwards. I think that in the near future it is 65 to 70 only.